How's it going, family? We're gonna go ahead and get started with today. NZD was a great session for this morning. Now I will be throwing the link down pretty soon for a New York session, so I will be throwing down a free Telegram so that way you guys can go ahead and access to that for when I go ahead and do New York sessions for free. So go ahead, and that's gonna be the first link down below. You can go ahead and click on that, and you can join the move as far as trading New York sessions alongside with me as well. I'm gonna go ahead and get started with NZD, get right to the point. NZD was a good, successful trade. We were able to get a 3-to-1 risk reward, and overall, we were able to maximize at a 5-to-1 risk reward. I mentioned everybody at 5 that once we were at 5-to-1, you can hit your take profit for today. So it was an overall 5% gain. As you guys can see, this is very good on that area. We were targeting a little bit higher for a 5.5% gain, but we did mention that at a 5% gain, we were going to go ahead and get out of the trade for those people that want to secure that trade. So I'm going to go ahead and walk you guys through as far as this trade, how it was the walkthrough, exactly things that we were looking for when it came to NZD. So I'm going to make things real easy, real simple, so that way you guys can understand as far as how I took this trade and why I took this trade. There are many pairs we were looking at. Euro USD, we were looking at NZD USD, USD. Looks like it came to that potential entry zone right now. On GP USD, we're looking at this one as well. And my favorite, we're looking at USD CAD, right? USD CAD was very, very close to the entry zone. We were off by a little bit. As you can see, we were off by about like 0.5 pips up to 1 pip. Now, this thing about trading New York session alongside with us is the fact that you'll be getting those precision entries, which is pretty cool. So I'm going to go ahead and just drop it down to NZD, give you guys a walkthrough as far as this trade alone, and, break it down. I'm going to go ahead and go to this one where we can go ahead and empty everything out. So as always, I always like to go ahead and, do my divisions. I want to go ahead and do on the 0-0 time where I can go ahead and see my days. For example, there's a new day. Now, I'm going to go ahead and go over to the 15-minute time frame and show you guys as far as what was it that I was looking for. So I can see that coming towards New York session, on London session, we had a dive to the downside. This dive to the downside helped me understand that market could potentially retrace or tap into that area for potential expansion to the upside. Now, also, on top of that, I want you guys to notice this. We had divergence, okay? So this is something that I'm very big on. As you guys can see, we have market going up on our RSI and market going down on the charts. Therefore, we had a good divergence area. Now, when we get in in details, you can actually see that over here we're oversold. Therefore, right on top of it, we were able to identify a potential point of interest, which is this right here. Now, this is just off of the 15-minute time frame. When we did jump on this session, market had already moved to the upside. We were over here already, and we saw that the market had created a point of interest on the 15-minute time frame. Therefore, we decided to jump on the 5-minute time frame where we can see a little bit more details as far as where that reentry could be. Now, as far as that reentry, it was a really good reentry, to be honest. We were able to go ahead and dive down on this area, but we didn't re-enter off of the 5-minute. We re-entered off of the 1-minute. So I'm going to go and show you guys this real quick. So on the 5-minute, you can see that we were oversold as well. And right above, we had this good point of interest, okay, that we were taking in consideration. Now, understand, this point of interest is exactly what I'm looking at on this New York session for today. We're looking at this point of interest because it oversold on the bigger time frames, and also it's being oversold on the lower time frames. But on top of that, for an extra confirmation, what's happening? We have a point of interest. Now, we did see the market move to the upside very rapidly. Now, understand that once you have a rapid move, that rapid move tends to not last long, or at least come back to potential retracement. Okay, that retracement, we went ahead and got on the 1-minute to see more details because we really want to be really precise as far as this trade. And we were able to identify that market had already created, its potential point of interest and then tap into that zone. But we also had accumulation of price right over here. Now, this accumulation of price on top of this next potential point of interest, which is right here, was able to help us identify that market could retrace back into that zone. Now, the way that I went about this is, okay, I took in consideration the accumulation of price, but I also noticed the point of interest. Now, as you can see, the point of interest isn't really oversold. So I went ahead and took this as my potential re-entry. Now, I told to myself, if it doesn't come down to that area, it's okay. I'm not going to force a trade. Because let's say if it does come down to that area and it does respect this area, perfect. But I'm not going to go ahead and put stop loss, too low over here, because what happens if it goes through this, it's definitely going to continue on falling down. And the reason why it would definitely continue on falling down is due to the fact that this area was already oversold. We had the divergence and we had all these verifications that I like to talk about. For example, the verification of liquidity, which is this right here. Now, for those that don't know what a verification of liquidity is, okay, it's exactly this move right here. This move that we were able to find right here is a verification of liquidity. Okay, now if I spelled it wrong, my apologies. Okay, so verification of liquidity. Now, what that verification of liquidity helped me understand is the fact that market had now shifted from a down market trend to now continue on a up market trend. I put a number in here, I believe, so let's go ahead and move this off. Verification of liquidity. So now, I was understanding that market could potentially come into this point of interest, which was exactly pretty much the area that I was looking for. And my Fibonacci retracement, as you guys know, I always like to look for about that 78.6 level. And that 78.6 level was rounding up right here, which I went ahead and put it up to our potential psychological level, which is at 65100. Now, this is a good level to attempt into, and as you can see, that 65100 came directly into that potential entry, which was right there. Now, I believe my entry was a little bit higher. It was like 6503. Let me go ahead and just double check for you guys. I don't want to go ahead and just, yeah, you can see my entry was at 65100. Perfect. So my entry was at 65100. And as far as that entry, our stop loss was 6.5 pips. And the reason why is because I wanted to go ahead and make sure that market didn't go back all the way down here. I did want to give it some space to breathe, even though I knew that this could have been our stop loss right here overall, which was 4 pips. But understand that on these sessions, I also take in consideration the other people that are trading alongside with me. Not everybody has the same broker. Not everybody has a broker that has raw spread. Some people have brokers that have 2, 3, 4 pips of spreads. So therefore, I got to be able to consider that into these sessions, and that's why we went ahead and put 6.5 pip stop loss. As far as our first take profit, we're looking at about a 3-to-1 risk reward, which is marking these equal highs and coming to this potential area, this zone. Okay, and finally and off, we were looking at a 5-to-1, which 5-to-1 we were able to come into that 5-to-1 risk reward right about here, and we were wanting to go a little bit higher, all the way to potential 5.5-to-1, which is up over here. But we didn't go all the way to that 5.5-to-1 risk reward, but we were able to take profits at that 5-to-1 risk reward that we mentioned. So saying this, you could have potentially risked 1% to gain 5% in one trade. Now, the cool thing about these trades in the morning that I like to take alongside with everybody is the fact that this trade only took 38 minutes to hit take profit, right? So 5% in 38 minutes. It's pretty cool, right? And we keep on doing this over and over alongside with you guys. And understand that market shifts, market moves around, and so on and so on. Now, this was a good trade. Did I get upset about USD CAD not entering where I wanted to? Yes, I did, kinda. But at the end of the day, we were able to get a good 5% risk on, a 5% gain on NZD USD. For example, USD CAD, again, we missed it by a little, but it's okay. It's part of the game. Okay, you're not always gonna go ahead and hit all the trades, but we like to get in and get out. This trade was placed at about 6. Let's say it was placed at about 6:45, 6:50 a.m. Pacific Standard Time when it comes to NZD USD, and we were able to get out pretty quick. So just to go ahead and go into the details, this trade was placed at 6:45 a.m. Pacific Standard Time, 9:45 a.m. Eastern Standard Time was when it was placed, and we got out at about 10:30 Eastern Standard Time. So it was a good trade, phenomenal trade. And with that said, I hope this was able to clear out some of your guys' thoughts on as far as when it comes to trading alongside with us. And not just that, but to also show you guys that you don't have to be behind the charts 24/7. You can get in, get your profits, and then continue with your day. For example, I'm done with trading. I made 5% of my account. That's good, right? Well, I didn't make 5%. I could have made potential 5%, but the way that I risked my trade, I gained a 1.5%, 1.25% on my account. But when it goes to that, I want to show you guys that you don't have to be behind the charts 24/7. The main reason why we trade is because we want to be self-sufficient. We want to be able to have that time freedom. So understand that you want to go ahead and do Get your own times and trade at that time, either New York, either London session, either Asia session, Sydney session. Study those specific pairs and just go with it. So with that said, again, if you guys want to go ahead and trade live with me, I will be dropping some links down below. The first one is going to be the first Telegram, the free Telegram for you guys to have access to that for when it is that I do go ahead and do a live free webinar. And you guys can go ahead and also follow me on Instagram. It's also going to be in the links below. With that said, I hope you guys enjoyed this session. You guys have a phenomenal day, and see you guys next time. Bye-bye.